Hello everyone, my name is Priya and welcome back to your very own YouTube channel. On this channel, we talk about professional trading mindset, trading psychology, and the habits that separate profitable traders from emotional traders. Now let me ask you something. Have you ever looked at a perfect setup, knew exactly what you were supposed to do, and still couldn't take the trade? Not because your strategy was bad, not because the market was unclear, but because fear quietly took control of your mind. If that has ever happened to you, then today's lesson might completely change the way you trade. Because today, we're talking about one of the biggest hidden enemies in trading psychology, fear. The fear of losing money. The fear of being wrong. The fear that this trade might become another loss. And the dangerous part is, most traders don't even realize how deeply fear controls their decisions. Sometimes fear makes you hesitate. Sometimes it makes you exit too early. And sometimes it completely stops you from taking trades that actually match your setup. But here's something important to understand. Even professional traders feel fear. The difference is not that they're fearless. The difference is that they've learned how to stay calm even while fear is present. And that's exactly what today's lesson is about. Steenbarger explains that fear is a completely normal human emotion. Whenever the brain senses danger, the body instantly reacts. For example, imagine you're crossing a road and suddenly a fast-moving car appears in front of you. Immediately your body goes into alert mode. Your heartbeat increases. Your muscles tighten. Your attention becomes sharp. And without even thinking, your body prepares to either run or protect itself. This reaction is called the fight or flight response. It's the brain's natural survival system. Whenever danger appears, the body automatically prepares itself to survive. Now in real danger, this response is useful. But problems begin when the brain starts reacting with fear even when there is no actual danger. And over time, that fear slowly turns into anxiety, hesitation, overthinking, and self-doubt. Now let's connect this directly to trading. Imagine you've done your analysis properly. The market structure looks clean. Your setup matches perfectly. Risk management is clear. Everything logically makes sense. But the moment you're about to click the buy or sell button, something changes. Your confidence suddenly disappears. Your heart starts beating faster. Your mind begins creating negative scenarios. What if this trade fails? What if I lose again? What if the market suddenly reverses? And then you start doing something many traders secretly do. You begin searching for more confirmation. One more indicator. One more candle. One more signal. Not because the setup is bad, but because fear is stopping you from trusting yourself. And many times, by the time you finally feel comfortable entering, the move is already gone. Now think about this carefully. Was the market truly dangerous at that moment? Or was your own mind creating danger when none actually existed? Because many times, the market is not the real problem. The real battle is happening inside the trader. Dr. Brett says that during moments like these, traders need to pause and ask themselves one powerful question. Is this fear coming from a genuine warning sign in the market, or is it simply an emotional reaction inside me? And honestly, that question can completely change your trading psychology. Because many times, the setup is actually valid. But past losses, emotional pain, and negative experiences create fear before the trade even begins. And once fear takes control, traders stop thinking clearly. Some traders hesitate and miss great opportunities. Some cut winning trades too early because they're scared of losing profits. And some traders become so afraid of being wrong that they stop trusting every setup completely. This is how fear slowly destroys consistency. Not because the trader lacks knowledge, but because emotions start overpowering decision making. And the most dangerous part is, many traders think the problem is their strategy. So they keep changing indicators, changing setups, changing time frames, searching for the perfect system. When in reality, the real issue is emotional instability. Professional traders understand something very important. You cannot remove uncertainty from the market. Losses will always exist. Risk will always exist. And fear will always appear from time to time. But mental strength comes from learning how to function calmly even in uncertainty. That's the real goal. Dr. Brett explains that the first step toward becoming mentally stronger is learning to recognize fear instead of automatically reacting to it. Because the moment you become aware of your emotional state, you stop becoming controlled by it. Professional traders don't run away from fear. They study it. They understand why it appears. And they train themselves to stay emotionally balanced even during pressure. That's what creates true confidence in trading. Real confidence does not come from winning every trade. Real confidence comes from trusting your process, even after losses. A confident trader is not someone who never loses money. A confident trader is someone who knows that one losing trade does not define them. They trust their edge. They trust their risk management. And most importantly, they trust themselves. So friends, if you ever feel fear before taking a trade, don't immediately assume something is wrong with the market. First, pause for a moment and observe what's happening inside your mind. Ask yourself, am I reacting to the market or am I reacting to my emotions? Because the moment a trader learns to understand fear instead of escaping from it, that's when real transformation begins. The market will always have uncertainty. Fear will always exist. But professional traders are not the ones who never feel fear. They are the ones who learn how to trade calmly even while fear is present. And once you reach that level, your entire trading psychology starts changing forever. Now let's understand this with a real-life example. Imagine a child stepping onto a stage for the very first time. The preparation is already done. They've practiced properly. Everything is ready. But the moment they walk onto the stage, their heartbeat suddenly gets faster. Their hands start sweating. And one thought keeps repeating inside their mind. What if I forget everything? What will people think about me? Now the truth is, there's no real danger on that stage. Nobody is trying to hurt them. But even then, the mind keeps creating fear again and again. And friends, that is anxiety. Now the same thing happens in trading. Many times, traders develop an invisible fear inside their mind. A fear that keeps whispering, what if I lose money? What if this trade goes wrong? What if everything falls apart again? And slowly that fear becomes so strong that traders stop looking at the market logically. Instead of trading with clarity, they start trading emotionally. The dangerous part is that many times, there isn't even any real danger in the market. It's simply the result of past losses, negative experiences, and the mental conditioning built over time. And until a trader understands this, they keep reacting the same way in every trade. Either they hesitate and step back out of fear, or they panic and make emotional decisions under pressure. Fear keeps sending the same message to the mind. You're going to lose money. And because of that, many traders slowly stop trusting their own strategy. They stop trusting their setups. They stop trusting their analysis. Instead of taking trades with patience and discipline, they begin making decisions based on emotions. And this is exactly what Dr. Steenbarger explains. Fear can sometimes make us run away from situations that are not actually dangerous. Which means many times the real danger is not in the market. The real danger is the fear reaction happening inside our own mind. And honestly, this is something every trader experiences. Whether someone is new to trading or already experienced, fear appears again and again. But here's the important thing. Not every kind of fear is bad. Sometimes fear protects us from taking reckless trades and huge losses. But when fear turns into anxiety, that's when it slowly starts weakening our confidence, our thinking, and our decision-making ability. Now let's understand the difference between fear and anxiety with a simple real trading example. Because many times, the right kind of fear can actually protect your trading capital. Imagine you're trading Nifty Bank for the first time. You analyze the chart, and based on your setup you believe the market may move lower. So you take a short position. In the beginning your analysis works perfectly. The market starts falling. Your trade goes into profit. Everything looks good. But after some time, price reaches an area where buyers had previously become active. According to the chart, it looks like a strong support zone. Now you begin noticing a few important changes. The downward movement is slowly becoming weaker. Candles start getting smaller. Momentum begins slowing down. And price keeps struggling around the same level again and again. At that moment a thought comes into your mind. What if the market reverses from here? Now you become slightly alert. You start thinking about protecting your profits. And after observing the price action carefully, you decide to close the trade. Then a few minutes later, the market actually starts moving upward. Now think about this carefully. Was the fear you felt at that moment wrong? No. That fear was not damaging you. That fear was giving you awareness about changing market conditions. Because there were logical reasons behind it. A strong support zone was present. Selling pressure was weakening. And the market was showing early signs of reversal. Which means that feeling was not emotional panic. It was professional awareness. Now let's look at the second situation. Imagine the market is still in a strong downtrend. Momentum is completely controlled by sellers. There's no nearby support level. The structure still looks bearish. But even then, you suddenly panic and close the trade early. Not because the chart changed, but because your mind started remembering past losses. You begin thinking, what if I lose profit again? What if the market suddenly reverses like before? And because of those thoughts, you exit the trade emotionally. Now this is not fear. This is anxiety. A reaction created more by past emotional pain than present market reality. And this is exactly what Dr. Steenbarger explains. Not every fear is bad. Sometimes fear helps traders stay alert to changing market conditions. But when fear starts appearing without logical reasons, when it starts coming from negative memories instead of actual market signals, that's when fear turns into anxiety. And slowly that anxiety begins damaging confidence, discipline, and decision-making inside trading. Friends, not every kind of fear in trading is bad. Sometimes fear helps you notice things that even the chart may not reveal immediately. In many situations, fear acts like an early warning signal. It tells you that risk inside the market may be increasing and that it might be time to protect your profits or become more cautious. So if you're new to trading, don't try to completely run away from fear. Instead, try to understand the difference between useful fear and unnecessary anxiety. With experience, you slowly begin learning when fear is protecting you and when it's simply your mind overreacting. The problem is that in trading, fear is often treated like an enemy. Many traders believe that if they feel fear, it means they are mentally weak. Some even think becoming a professional trader means becoming completely emotionless. But the truth is very different. Sometimes fear can actually become your best guide. Imagine you've entered a trade. In the beginning, everything looks normal. The chart still seems fine. But suddenly, deep inside, you start feeling uncomfortable. Something doesn't feel right anymore. Then you begin noticing subtle changes in the market. Price is no longer moving with the same strength. Momentum starts slowing down. And gradually you feel that the trade may not be as strong as it looked earlier. Now here's something interesting. Sometimes your subconscious mind notices these tiny changes before your conscious mind fully understands them. Your brain quietly starts detecting weakness in the market structure even before you can logically explain it. And that's why an internal warning feeling begins to appear. Now imagine if you ignored that feeling completely, just because you thought it was a negative emotion. You might miss an important market signal that your mind had already started recognizing. And this is a very important lesson in trading psychology. The goal is not to eliminate emotions. The real goal is to understand them correctly. Because every emotion, especially fear, is trying to tell you something. Sometimes fear is warning you about genuine danger, and sometimes it's simply anxiety. Fear created by past losses, negative experiences, overthinking or emotional trauma from previous trades. That's why you should never blindly run away from fear. Observe it carefully. Understand where it's coming from. Ask yourself, is this feeling connected to the current market condition, or is it connected to my past emotional pain? Because many times the chart gives signals later, but your mind senses the shift in market behavior earlier. And that's exactly why properly understood fear can sometimes become your greatest trading coach. Whenever you feel nervous while trading, the first thing you should not do is assume that you're weak. Don't immediately start thinking, maybe I don't have confidence. Maybe I'm not made for trading. Because many times, nervousness is not weakness. Sometimes, it's simply a warning signal. Think about it like this. Imagine you're driving your car, and suddenly a red warning light appears on the dashboard. Now obviously you wouldn't just ignore it. You wouldn't cover the light with tape and pretend everything is fine. Instead, your attention would immediately shift toward understanding the problem. Your mind would start checking what might be wrong. Maybe the engine is overheating. Maybe there's a technical issue developing. Or maybe the car is trying to warn you before a bigger problem happens. Because deep down, you already know something important. Ignoring a warning sign today can create a much bigger problem tomorrow. Now connect this idea directly to trading. That uncomfortable feeling inside you. That nervousness. That strange sense that something may not be completely right. Many times, it works exactly like that dashboard warning light. So if your mind keeps whispering, something feels off, don't immediately try to suppress the feeling. Pause for a moment instead. Take a breath. Observe yourself calmly. And then ask yourself a few honest questions. Has something actually changed in this trade? Is the market behavior starting to shift? Or is this simply emotional fear coming from inside my own mind? Now imagine another situation. Suppose you're trading Nifty Bank with a much larger quantity for the very first time. Until now you were comfortable trading smaller position sizes. But this time, the amount of money involved feels much bigger. Now, even though the trade is still moving in your favor, even though the chart still looks healthy, and the setup hasn't failed, you still feel uncomfortable inside. A strange nervousness slowly starts building. And this is exactly where many traders make mistakes. They panic, they rush decisions, or they exit the trade emotionally without properly understanding what they're feeling. But in situations like these, the smartest thing you can do is pause and think clearly. Ask yourself, is the chart actually showing danger? Has the market structure become weak? Did an important support or resistance level break? If the answer is no, then maybe the fear is not coming from the market at all. Maybe your mind is simply uncomfortable because the risk now feels bigger than what you're normally used to. Your brain is adjusting to a new level of emotional pressure. And during moments like these, you don't need to run away from fear. You simply need to calmly remind yourself, my stop loss is already defined. My risk is controlled. And I didn't enter this trade randomly. This is one of the most important lessons in trading psychology. Whenever you feel emotional pressure, don't just try to silence your emotions. Question them. Study them. Understand where they're coming from. Because the moment you begin understanding your emotions better, you also begin understanding the market with far more clarity. Dr. Steenbarger explains that fear must be understood. It must be recognized. And most importantly, it should not be avoided. It should be faced. Because if fear is coming from unhealthy thinking patterns, then your thinking needs improvement. If fear is coming from changing market conditions, then your strategy may need adjustment. And if fear is coming from past losses, painful experiences, or emotional trading trauma, then that emotional damage needs healing. Dr. Brett shares a very powerful idea. Fear continues controlling us until we clearly recognize it. But the moment you begin understanding your fear, instead of blindly reacting to it, two powerful abilities start developing inside you. First, the ability to take the right action under pressure. And second, the ability to think clearly even during uncertainty. Because trading is not just a game of charts, indicators, and setups. Most of the time, the real battle is happening inside your own mind. It's a battle between discipline and emotion, between patience and panic, between clarity and fear. And the trader who learns how to stay calm, aware, and emotionally balanced during pressure slowly becomes the kind of trader that most people struggle to become. Brett Steenbarger says that whenever he coaches traders live, there's one thing he often tells them. Think out loud. In simple words, whatever is happening inside your mind, say it out loud. Because many times, the moment we put our thoughts into words, we finally start realizing whether our decision is based on logic or simply based on fear. As long as thoughts keep spinning silently inside the mind, confusion continues growing. But the moment you speak those thoughts out loud, your mind slowly starts revealing the truth to you. Let's understand this with a trading example. Imagine you're planning to buy shares of Reliance Industries because the chart is showing a strong bullish breakout. The setup looks clean. Price has already moved above resistance. Everything seems bullish. But the moment you're about to press the buy button, fear suddenly appears. Now in this situation, there can be two very different possibilities. The first possibility, your fear is actually reality-based. Maybe you notice that although the breakout happened, the volume still looks weak. The overall market is not supporting the move strongly, and there's a chance the breakout could fail. In this case, fear is not hurting you. It's trying to protect you. This is healthy fear. And avoiding the trade here might actually be the smarter decision. But now let's look at the second possibility. Imagine the setup is perfectly valid. Volume is strong. The market is supporting the move. Everything matches your original plan. And yet you still feel afraid. Why? Because last week, you faced 2 consecutive losing trades. Now your mind has started connecting every new opportunity with past pain. You're no longer reacting to the current chart. You're reacting to old emotional memories. And this is not reality-based fear. This is emotional fear. Fear created by recent losses, self-doubt and psychological pressure. In situations like these, if you avoid the trade purely because of fear, you may end up missing a genuinely good opportunity. And this is exactly what Dr. Brett explains. Fear is not always there to stop you. Sometimes, fear is simply there to make you think more carefully. The moment you start treating fear like a warning light instead of an enemy, you stop reacting blindly. Instead, you pause, analyze the situation calmly, and make better decisions. And honestly, this is one of the most important skills in trading psychology. Because the moment you become your own trading coach, you must learn how to read your emotions correctly. You need to recognize whether what you're feeling is a genuine warning signal or simply discomfort caused by uncertainty and change. Now the question is, how do you actually coach yourself during trading? Dr. Brett shares a few very practical methods for this. The first method is simple. Talk out loud. While trading, speak your thoughts clearly. Ask yourself things like, why am I taking this trade? Is the setup still valid? Am I making this decision logically or emotionally? The moment you give your thoughts a voice, your mind starts becoming clearer. And slowly you begin recognizing whether your fear is genuine or simply discomfort from stepping outside your comfort zone. The second method is creating a mini checklist. Whether you're trading in a prop firm, sitting in a trading room, or trading alone from home, a simple checklist can help stabilize your emotions massively. Ask yourself questions like, is volume supporting my direction? Does the overall market structure support this trade? Are multiple stocks moving in the same direction? Am I entering based on my planned setup or entering impulsively? Questions like these help you separate emotional fear from actual market reality. In the beginning, you may not remember all these things naturally. That's why writing your checklist down and keeping it in front of you can help tremendously. Think about a fighter pilot before takeoff. Before flying, they carefully check every important indicator on the dashboard. And in the same way, a disciplined trader must check both the market and their own mindset before entering a trade. Because many times, fear is not just fear. Sometimes, it's an opportunity to pause and think clearly. It forces you to ask important questions. Is my analysis actually correct? Is the market truly supporting my trade? Do I genuinely have an edge here? And slowly those questions begin transforming fear into clarity. Mike Bellafiore also says something very important. Don't run away from a trade just because it makes you feel uncomfortable. If the trade matches your plan, fits your setup, and follows your rules, then don't avoid it purely because of fear. You don't need to suppress fear. You need to listen to it, understand it, and then deal with it calmly, logically, and with the discipline of a true professional trader. So friends, today's lesson teaches us something extremely important. Fear in trading is not always your enemy. Sometimes, fear is actually trying to protect you. Sometimes it warns you to slow down, to think more carefully, and to avoid making emotional decisions under pressure. The real difference comes from how you understand that fear. If you react emotionally without thinking, fear will slowly make you weaker. But if you learn how to observe it calmly, that same fear can help you become a more disciplined and emotionally strong trader. Always remember, Successful trading is not just about strategy. It's not only about charts, indicators, or finding the perfect setup. Trading is also a game of self-control, patience, and emotional awareness. And the trader who learns how to understand their own mind slowly starts understanding the market with much greater clarity. So if you found today's lesson valuable, if this video helped you learn something new about trading psychology, then make sure to hit the like button. Your support genuinely motivates me to keep creating high-quality trading mindset content like this. And if you truly want to improve your trading discipline, emotional control, and professional mindset, then subscribe to the channel and press the bell icon so you never miss upcoming lessons from this series. Also, I'd really love to hear from you. What kind of fear affects you the most while trading? Is it the fear of losses? The fear of being wrong? Or the fear of missing opportunities? Let me know in the comments. I genuinely read your comments, and honestly your feedback inspires me to keep making better and more valuable videos for all of you. Thank you so much for watching, friends. I'll see you in the next video with another powerful lesson on trading psychology.